So hello everyone, welcome to our first day of our bootcamp for beginners. The reason I'm doing this is for you to cope with the information better. First of all, I want to say none of these concepts are my own, and I do not claim mentorship, authorship for those. And the second thing is this mentorship is only for 1 month. So obviously it's not gonna be enough time for you to become profitable within this 1 month, but it will give you the best foundation in the whole industry. And yeah, and it's just up to you to backtest, live test, and study on your own after this mentorship is over and become profitable. So let's get started. And yeah, and by the way, today, I'm gonna turn off my phone. Today we won't have any crazy technical stuff, more like mindset and fundamental noise around it. So let's go. Let's get to the next slide. Yeah, so day 1 of bootcamp. This is the guy below is you now, and the guy above is you after this bootcamp. So let's go. Yeah. So today we are gonna talk about introduction, expectation, mindset, what you should expect yourself to be capable of in the future when you become profitable, and after going through this bootcamp, right? We'll talk about SNC and retail, how these guys are becoming our liquidity in future, and the basic structure, and something new for new people who are coming from SMC, intro to algo structure. Let's go. And by the way, I'm not sharing my screen because my screen is too wide. Yeah, so yeah, let's go to the next slide. Yeah, fundamentals. So this is all what I've been taught, and those are theories basically, but it's just history of the market, right? So before 2002, if you wanted to trade on the financial markets or whatever, you would have to call your local broker, your local bank. Yeah, so if you wanted to open a trade, you just have to call them, and they will find a physical opposition to you, or they would place their own trades against you, which is how the market works nowadays, right? If you open a trade, a bank is forced, and it is their obligation to open a trade against your. In 2002, the IPDA, aka the intraday price delivery algorithm, was introduced to the market. So since then, everything is still the same, right? Nothing has changed. The technicals, if you backtest one strategy in a random day in this year, 2022, and you backtest one random day in 2004, for example, the result will be the same. The technicals has never changed. And the Forex market is the most manipulated, obviously, out of all financial markets, such as stocks and indices, because there's the most money in here, and it's all the central bank. So who owns the IPDA? Nobody knows that, of course, but if you think rationally, it's most probably a Federal Reserve System, right? And Federal Reserve System regulates central banks, and then everything is below. Market brokers, retail brokers, smaller banks, retail banks, and then retail brokers. So all the information goes in there, whether technical or psychological. So let's go to the next slide. Yeah, logic behind the market. The whole market is man-made, and knowing this will open your door to open-mindedness. I don't know if that's a word, but yeah, let's pretend it is. So what does it mean that the whole market is man-made? No, can I go back one slide? You've messed up. Yeah, so if you test a retail strategy or whatever strategy that has been taught publicly, for example, support and resistance or break and retest, and make a EA with it, and this is tested, by the way, this was tested by my mentors before that I've learned from, and you put a risk to reward 1-to-1. Can anyone guess what win ratio you will get with 1-to-1 risk to reward if you let the EA run for 10 years? Okay, 30%. No, okay. So let's make it quick. It's exactly 50%. The market doesn't really want your money, okay? And the banks don't need your $100 that you have in your retail account. And why is that? You can go to the next slide. And it's exactly 50%, you know, maybe a difference of 1%, 49, 51, 51, but it's data. It is to keep people in the game as long as possible, because obviously that $100 is worth more if it's used as a buying power, right? So if you put it in a broker or whatever that actually trades and actually gives you a real leverage in the market, then that $100 is has $10,000 of buying power. So yeah, it's just for you. They want you to become liquidity. They want you to open trades, close trades, and just provide liquidity for the market, but never interested in your $100. Let's go to the next one. So, and because of this, we know the fact that we know that the whole market is controlled by the algorithm. We know that the martingale. Yeah, so you know that the whole trajectory or the whole trajectory is preset or predetermined, and there's no coincidence in the market, right? Every move is intentional, and yeah. So you see, it's designed to evoke feelings and emotions in you, and you can experience this from day-to-day basis, right? And this is obvious. Let's go to the next. Yeah. So expectation from this mentorship and whatever mentorship you'll attend in future. Don't expect to catch every move from the daily range if you haven't worked for it behind the scenes, or you'll end up losing more than you are losing now. So this statement is true, right? And even when you become profitable and when you reach a daily, intraday mastery level, you won't trade the whole day, and you won't. No, this is a get rich quick actually. But yeah, after a few years of work. But the thing is, don't trade, don't overtrade, don't try to catch, you know, and shit. Don't expect 100% win ratio. We are doing this. This concept will not give you 100% ratio, and it will give you, I don't know, let's say, if you become really, really good, it can give you 70% plus. If you only take high probability trades, of course. Yeah, so expect to learn something new, especially if you are coming from an SMC, and even if you are trading liquidity-based concepts now already, or algo concepts, or whatever else. You know, you can still learn something new from my personal perspective, and I can learn something from you as well. So don't be shy to share your knowledge, and expect to do a lot of studying before backtesting and actual trading. So this is the most important thing. If you are coming new from SMC, then, you know, don't even trade now, because what are you gonna gonna test or what are you gonna trade if you don't have a whole strategy yet, right? So why we are doing this in a backtesting, now in a bootcamp format, is to keep you learn and getting the information slowly, so you can actually process them in your head and put few hours a day in just backtesting it and studying it, you know, each concept separately. So that's everything. Yep, let's go to the next one. Mindset logic. Okay, so this is supposed to be deleted. This is supposed to be deleted, but whatever. If you win, forget about it. If you lose, forget about it. This should be in your psychological checklist, but I'll give you one in future. And what do I mean by this? You can't have emotions when it comes to trading, right? If you lose, then don't care. If you win, you shouldn't have any dopamine rush or anything like that. You shouldn't be super hyped and open another trade. You should be like a machine, emotionless, right? Forget what you saw on social media. This is regarding idiots like Rame and our marketing gods who are who are marketing 100R a day. You don't really need that, and nobody really does that if they're profitable, because, you know, it's really mentally consuming just trading. And, you know, even Yusuf says he doesn't like trading at all. It's the most boring thing you can as a job. So, you know, your goal shouldn't be to be able to ping pong the market. That I don't know who came up with this, but, you know, I punch him in the face for that, because I was misled in my early days as well, and just looking for the secret sauce. But, you know, the goal should be 1 win a day or 2 wins a day, and then stop it. Let's go. But of course, you'll be able to catch any move you want. And yeah, can we go one back? We forgot one thing. You won't get 100% win ratio, but you will understand most of the market moves, right? So if you if you hit your stop loss or something, you'll be able to explain it logically why it happened and from a technical standpoint. Okay, let's go. Retail and SMC. So obviously there must be people who are losing money in the market, right? And those are retail and SMC. What do I mean by SMC? I don't mean ICT. ICT is the only true SMC that exists in the whole industry, or maybe someone before him. But what do I mean in this case is Instagram SMC, you know? there was never a thing like a chalk. I don't know who came up with it, but they just renamed everything and they just took 10% of the original ICT. So yeah, there are gonna be a lot of the ones leaked. Yeah, so what I mean by ICT, by the way, is structure, big structure, supply, demand, nothing else. So the SMC that is taught now in modern trading and in Instagram and social media is just a better version of supply and demand, which has been failing for the last 20 years. So yeah, but that doesn't mean that you can be profitable with it. I do have a trend line trading plan, and I do have a support and resistance trading plan that works for me. So there's nothing, it's nothing like you should be disgusted of, or you shouldn't laugh to people who are trading retail or SMC, because at the end of the day, the Lambo drivers are the retail traders, right? Yeah, so let's go. And the top traders on funded prop firms are support and resistance traders. So let's go to the next slide. So retail concepts, some theories of technical analysis was already mentioned in the late 19th century. It was specifically from Dow, and it was a founder of Dow Jones, of today's, what do you call it? ETF. Yeah. So yeah, let's go. And so retail concepts, retail technical analysis and concept were getting popular in the end of 20th century because banks obviously were trading fundamentals only. They were trying to somehow, you know, try to balance in the market by looking at fundamentals, by economic indicators such as interest rate and stuff like that. But obviously all of them were losing, or most of them were not profitable, and it didn't work. So the retail came to life. Let's go. So let's check how we are taught in our first months or even years in our trading journeys. So see, all of those are something you are familiar with, right? And we'll go through that right away. So let's go. Break and retest range. Okay. So this is how we should see liquidity and how it works. But that's just at this level. When you master these concepts, you will come to a different liquidity concepts that will open your mind. But this is good for now. So you see S&D, right? I can't write here. S&D, wait, what? No, this is double top, sorry. Double top, support resistance, break and retest, right? Trend line. I don't know what pattern this is, but yeah. And even trend line breakout, right? All those red dots are where people are entering. And the best is breakout. It's like a roller coaster of that death. So let's go to the next. Yeah, and here you see. Oh, no. So here you can see how traders, retail traders are getting trapped. The blue dots are where they enter. You see, if you look at the chart with naked eye, we can just tell that this is consolidation and both sides are going to be destroyed, right? Same as here, support resistance. Same as here, break and retest. And support resistance, nothing you've never heard of. So let's continue. So like retail concepts, SMC was around for a long time, not SMC, but S&D, supply and demand trading. And as I've said before, it was over 20 years. And even if you backtest the same concepts now, they were never working to begin with. They are targeted even more, leading to having the worst win ratio of all concepts. So, but the reason they're doing this is they are trying to hunt a small stop loss to have 1 to 10, 1 to 20, or have a 1 to 100, right? But 1 to 100 isn't that impressive. Anyway, because you're gonna take partials 20 times and you'll end up with, I don't know, 20% with 1% risk in the best case. But prior to that, you're gonna, so worst win ratio, I would say 10 to 30% max. And but I don't wanna insult SSE coaches or SSE traders here that are profitable before. If you have over 50%, I'll vote you. But yeah, you are a prodigy and you have something else that other normal and average traders don't have. So let's go. And SMC. The reason why SMC is failing because they are solely using a structure for their directional bias, right? So when you get to a ranging market or anything, something like that, like we had on EU 1 or 2 weeks ago, it was a roller coaster of death, right? Price did something like this, then did this, and then did this, you know, we had the breakout structure down, then it did this, and then broke up, you know. There was no way any of them were trading that and came out alive. Here I see we had a chalk, right? So let's pretend we don't see this. They're trying to buy. But on higher time frame, we have a BOS, so we're bearish, right? We have a chalk. They're waiting for extreme. They never get tapped in because they don't understand that this whole price action is already efficient. And we are gonna talk about efficiency and equilibrium tomorrow. But yeah, so again, we had a fractal chalk, right? No, they don't even look at the sweep. Yeah, so breakout structure, they start jumping, you know, it start breaking structure, mitigation, you know, this was what made this chalk, right? This was the OB, so they are jumping on it. But of course, they have winning trades as well. This was a breakout structure, EOS, they take mitigation, win, breakout structure, mitigation, win. And that's all there is here. Yeah, but they hit break even at the end of the day, so it doesn't really matter. Let's go. This is supply and demand, which is a demo version of smart money concepts, right? So obviously they want to try and find, and this wasn't even an original supply and demand. Original supply and demand was a demo version of of support and resistance. So this would be a supply for before, and this would be demand. This would be supply, and this would be looked at as demand. But this is modern way to look at it, and they just, I don't know what they're doing, but I am gonna guess that they're just trying to find the OB or whatever thingy. So let's go to the next one. So basic market structure, and this is nothing that you have never been taught and nothing new for you. So you can use this as your higher time frame directional indicator to find, for example, on daily, on 4-hour, or even on weekly, to find the flow of the market and have your right bias, right? Gets manipulated a lot. We'll get to that. Same as SMC and supply and demand. We will have multiple chocks, is what you would call it, but as I said before, there's no chock. It was a break of structure from the beginning, and must be used with other confluences. And we will get to this. We'll get to this later in the bootcamp, because such as time, price, liquidity, all of this has to sit well. So let's go. If one day everyone know about algo trading, will it be liquidity? I don't think so. I don't think they will ever update the algorithm itself. So let's go, because we are not that much of a threat to the banks. We have no impact. So you see, this is a simple, so we'll get to more spicy stuff now. So as you can see, we have an uptrend and downtrend, right? And we'll get to basic liquidity right away. So uptrend, why? Obviously, higher low, higher high, higher low, higher high, higher low. So let's say this is a 1 hour. This low would be my external structure. This low would be my external structure. And external liquidity, that's what why it's important. You have lower high, lower low, lower high, lower low. And again, this would be my external liquidity. This would be my external liquidity as well. And usually this, for example, on the uptrend, this is a weak low and this is a weak low as well. And this is strong high. How do we know? A strong high basically is just a liquidity sweep, and a weak low is either a spike down, right, without anything, or it's just a build-up for future. And we'll talk about build-up as well, because that's my main entry criteria. Same as this, weak low, weak high, weak low, strong high, external liquidity. Again, you'll have something like this, and here you'll have strong high. As simple as that, right? And when you finish this course, I believe you won't even need structure. So let's go. Strong high, strong low, that thing I just mentioned, right? Sweep of internal liquidity, and a break of structure. And maybe possibly mitigating something, but mitigation for me is liquidity in future. So yeah, and we can get to the examples as well. Oh, and I forgot the breaker. Well, yeah, so as you can see here, there's on chart. What is it? Internal liquidity being swept and leading to breaker structure, and you even have this build up to confirm this POI, right? This is fine. And we can get to the second picture right away. Can you go to the second link? Yeah. Yeah, same thing. Internal structure, internal liquidity was taken out, breakout structure, and maybe something from the left, but that's not important for now. So everyone, you know, take 5 seconds, take deep breaths, and just like look at this beauty. And we can start, we can go to the next one. Protected high and low. What is the difference between this and a strong high, strong low? Obviously, we are sweeping. Look, this was our external liquidity. This was our external liquidity, right? Then we had a BOS. For now, it's just a BOS, okay? So what? We are anticipating that price is turning bullish, right? That's the first. Oh no. So that's the first thing that comes to our mind. So obviously, this is external. This is external liquidity. This is external liquidity, and even this becomes external now. After price sweeps the external liquidity and breaks to the upside, this will become protected for you. Does it have 100% hold rate? No, obviously, but I'd say 80%. Depends on what price and what we do, what the high does, and where the high will come from. Same as this, you see, external liquidity, break of structure, right? And now we take out, we change. Yes, that will be a strong high, strong low. And then we have a break of structure, right? And this is external liquidity now, this guy. After external liquidity was taken out and we break another true break of structure, this will become a protected high and you can trade of it. So that's the, we can go to the example to show you in practice how it looks like. Yeah, as you can see, we are having, wait, what? Oh yeah, it's here. Sorry, I'm retarded. Yes, I was looking at it right. So basically we have what is it? Higher, high, low, high, right? Low. This was taken out, the higher low, and then the higher high was taken out, and we broke structure to the downside. again, same example as before, had built up, and that's the reason why this was being held. So yeah, let's go. Yeah. Oh, yo. So yeah, ignore this, and I don't know who this guy is, but now we are moving to basic algo structure. Let's go, let's go, let's go. Quickly. Yeah. So as you can see, all of this is holy grail of trading. Okay, this is what people are charging $5,000 for, and we'll keep it authentical, and we'll call it MSU. All of those setups. What does MSU mean? Wait, what can I write? Yeah, here. MSU meaning manipulation setup. Okay. So study this, you know, when you're bored during the weekend, just sit down, and yeah, that's inducement, exactly. And sit down and check it on chart, look at 10 different scenarios, and you'll find it. So obviously we'll do it from the simplest to the hardest. Yeah, so this would be your fake BOS. Wait, how do I? Yeah, this is your fake BOS. This is your key BOS or a true BOS. True BOS. Oh, and this is your inducement. And that's the problem of smart money traders. They are teaching inducement completely wrong. They think that the inducement is, oh wait, what? Yeah, they think the inducement is the liquidity that is lying below your POI, right? But that's just liquidity, to be honest. And so that's just it. So this is one setup. Let's do another one. We can use it. This is for reversal. If you ever want to trade from a supply and demand, I would only take it with this confirmation. Same. And this is demand. This is buy scenario. And take a screenshot or something if you're new and you can't really memorize it. And then we'll move to this guy. All right. This is inducement. Yeah, I don't know how to make it smaller though. Yeah, that's stupid. It's more stupid. This is inducement. This is FBOS. And this is a true BOS. Okay. So let's stop for a second, okay? And let's imagine we are here in the market. What can be our confluences for this guy to be in an FBOS? Simply, either we are just broke structure and price didn't tap into the equilibrium, which means 50%. That's one case, equilibrium, right? The second case is if we are not efficient. What do I mean by that? What do I mean by this statement? Obviously, all ranges are sell to buy and buy to sell, right? So this is your buy to sell, right? This whole thingy on a time frame big enough becomes your supply. And this is your demand. Oh no, not this guy. I'm stupid. This guy, right? They have to sell before they buy and break structure. So whenever the ranges are connecting like this, yeah, we have, how much time we have? Yeah, 2 minutes. Okay, we'll send a new link. But basically, what was it? Yeah, if the ranges are connecting, as you can see here, this is buy to sell, connected with this buy to sell, this price action is efficient. If price is not connecting and we have holes between them, we can't trade that, obviously, for obvious reasons. So, so that's another scenario, right? Imagine that this low was here and we didn't top. And you should never ever take a trade if there's inefficiency in the market. Unless there's something happening, and we'll talk about it next time. So obviously, yeah, the third scenario would be a displacement, which would mean that this guy, right? This breakout structure is just a little like this. You can see it in live market a lot. No, price does something like, let me draw it, like this, and it breaks like just by a few pips, or pipettes, depends on time frame, take out and go. So a small displacement is the third scenario, and the first scenario is just because it lines up with liquidity. Imagine this high, this low was a bit higher, even though it would be this high would be like around here, it would line up with support and resistance break and retest. So let's restart it.